This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. It is Tuesday, September 10th. This is Not Your Advisor with NYU Grad. Let's jump into today's session. I will try to do my best to get through this in a expedient fashion here. So we had 532 new highs across the NYSE versus 328 new lows on the day. 52% of stocks were advancing versus 44% declining. 52% of stocks were below their respective 50-day moving average, and 40% of stocks were below their respective 200-day moving average. Looking across, before I go into mega cap land, the Dow was the weakest, closing down 92 points, or about 0.25%. The Nasdaq was the strongest, up 141 points, or 0.8%. The S&P 500 was up 24 points, or about 0.45%. We started to sell off right before lunchtime. I didn't see any reason, and then we miraculously V-bottomed right at lunchtime, and we closed across the S&P and the Nasdaq at the highs. On the Dow, we closed below where we closed on the Monday session. Taking a quick look at mega cap land, I do want to preface that only Tesla is above its 50-day moving average across the Mag 7. The rest are below their 50-day, and Tesla is barely above its 50-day. Microsoft today was up 2%. Oracle, which obviously is not mega cap, but it's in the same technology group, was up 11%, by the way. Just wanted to share that. NVIDIA was up 1.5%. Apple was down 0.36%. Google/Alphabet was up 0.3%. Meta was zero, like not up or down, it was break even. I can't talk today. Amazon was up 2.3%, and Tesla up 4.5%. The thing that stood out to me was energy was being sold off pretty hard, as well as the financials, with a potential rate cut coming soon, and they've all been rallying of late. I was surprised to see that. JP Morgan was down 5.1%. Wells Fargo was down 1.1%. You had Citi down 2.67%. American Express down 2.19%. And then you had Goldman Sachs down 4.39%. PNC Bank was down 2.1%. So pretty red day in financial sector. Let me just kind of go through what stood out to me today. Obviously, yesterday was the Apple event. It was very lackluster. I don't really see many people upgrading their phones just because of the iPhone 16 or the 16 Pro. I had a poll yesterday asking the audience, is the iPhone 16 enough for you to upgrade? 53% no, they're going to wait. 18% yes, they're going to pre-order. And 29% said they're on Android, so likely won't be switching. I've included in the show notes Apple chart. Long term, you'll see that purple dotted line that goes back to the .com crash. That broke down momentarily. That was all happening, by the way, the breakdown, when Warren Buffett and Berkshire was selling all of those shares, but it finally bounced and overtook that broken trend line, but we're sitting right at it right now. So we're right below the 50-day. It needs to get going to the upside, or there's going to be some downward pressure here. What else is notable? Obviously, tonight, is the presidential candidate debate at 9 o'clock Eastern Time. I may watch it just so I have an informed opinion on what happened, but I'm going to just share with you my personal thoughts on this without going too personal. To me, it's a choice between two bad options. It's like you go to the grocery store, you see Coca-Cola and Pepsi. They're both very bad for you, loaded up with sugar. I don't know if you know this, but Ferrari dealerships and paint shops, they use soda to strip the paint off of metal parts off of cars. So that's the analogy I would make with both of these candidates. I know we're going to all have to choose one or the other, but my question to you is, why are these two people the only choices we have in this great country of the USA? If you're listening to this in the US, why are these two the only people? And who made these choices to give to us as the choices that we have? Is it really a choice that we're making? That's what I want you to think about as you watch the shouting match that's about to happen tonight. So let me know if you're going to be watching the debates. I have a poll today, either yes, no, or undecided. Another bit of data that stood out to me was a safety stock that I recommended to the premium members is making all-time highs. And the second stock is right behind that one. And I feel glad because I've kept a lot of my premium subscribers out of this mess and in safety. But I don't know how I feel about safety making all-time highs. Let's see how far this continues, because these stocks have been down less than the market, and when the markets are up, they've been up participating as well. So it's been win-win situation. But I'm wondering if it's getting a little too hot. But we'll see. I'll keep a close eye on this. Other things that I want to cover real quickly are volume. So at 3:15 p.m. with 45 minutes left to go, on the SPY ETF, there was only 27 million shares traded. We closed the day at 35 million shares traded on the SPY. The average is only 50 million, but we were at half the volume of 50 million at 3:15 New York. And that average volume, daily volume of 50 million, is down from 70 million a few months ago, pre-summer. So the volume is contracting every day, week by week. And this is not going to last forever. Volume's going to come back. And every time I've seen volume come back on an intraday session, it's been to the sell side. Let's see what else. So we had yo-yo action intraday. We were actually down pretty heavy, but we fought our way back in the afternoon. What was strong today? You had Marathon up 9.03%, Riot up 6.3%, TerraWolf 6.2%, Kinross Gold 5.8%, Sweet Green 5.8%. These are all percentages, by the way. IREN 5.6%, Broadcom 5.1%, Hut 8 Corp 4.7%, Tesla 4.5%, Lyft 4.3%, Hims and Hers 4%. What was weak? New York Community Bank, as I mentioned, a lot of financials were red. New York Community Bank was down 7.8%. UCO, which is oil, down 5.3%. DRV down 5.21%. CarMax down 3.6, Light Sweet Crude Oil down 3.5, Carvana 3.5. And just a quick note about CarMax and just general motor vehicle inventories. There are a lot out there. Dealership lots are full to the brim, whether you're looking at Ford, General Motors, Harley Davidson, Polaris / Indian Motorcycles. And many will say that, hey, we're about at pre-COVID levels, nothing to panic about. But the interest rates are double or more for those that are low credit scores, more than double APR to take out a loan to purchase any of this. So I suspect that the dealerships are going to be the ones to first show signs of distress in that industry. For free members, obviously tonight is the debate, so continue to watch reaction to that. Tomorrow morning, you have the CPI data coming out pre-market. On Thursday, you have the PPI data. And then next week, you have the not so secret rate cut. Everyone in the world is expecting a rate cut of some sort, whether it's 25 basis points or 50 basis points. Everybody in the world is expecting a rate cut. Premium members, please stay on. I'd like to go over some charts. Free members, I will see you all after the Wednesday session. That's my train.
Stand clear of the closing doors, please.